84 million bank accounts could be frozen by Monday morning. This is not speculation. This is not fear-mongering. This is systematic financial control implementation that has been planned for months and is now entering final execution phase across major banking networks. This is the final warning, and time is running out. Let me show you exactly how this coordinated freeze operation will function. Let me walk you through the technical mechanisms that enable instant account lockdown across multiple institutions simultaneously. And let me explain why this represents the transition from traditional banking to complete financial surveillance and control. Because when you understand the compliance systems, when you see the automated triggers, when you recognize the legal frameworks already in place, you realize this is not future possibility. This is Monday morning reality for 84 million Americans who have no idea what is coming. The banking freeze is not theoretical. The banking freeze is systematic implementation. Every authoritarian system in history required financial control to achieve population management. Physical cash elimination represented the first phase. Digital transaction monitoring represented the second phase. Account freezing represents the third phase, where individual financial autonomy disappears completely. The legal framework for coordinated account freezing already exists through anti-money laundering regulations, suspicious activity reporting requirements, and know your customer compliance mandates that treat normal financial behavior as potentially criminal activity requiring investigation and account restriction. Banking compliance departments have installed automated monitoring systems that analyze every transaction, every deposit, every withdrawal, and every digital payment for patterns that trigger algorithmic suspicion flags. These systems operate continuously without human oversight and can freeze accounts instantly based on predetermined criteria. The criteria include cash transaction patterns, international wire transfers, cryptocurrency exchange activity, precious metals purchases, business cash deposits, large ATM withdrawals, and digital payment velocity that exceeds algorithmic normal ranges. Any combination of these activities triggers automated investigation protocols. But the current implementation extends beyond traditional suspicious activity detection into comprehensive behavior analysis that treats financial privacy as inherently suspicious while rewarding complete transaction transparency through preferential account treatment and expanded service access. Financial institutions have coordinated implementation timelines to ensure simultaneous deployment across major banking networks. This coordination prevents customers from avoiding restrictions by transferring funds between institutions before freeze implementation occurs across the entire banking sector. The technical infrastructure enables instant communication between banking compliance systems and federal monitoring databases that share account holder information, transaction histories, and risk assessment scores in real time. This sharing occurs automatically without warrant requirements or judicial oversight. Account holders receive no advance warning of pending freeze actions because notification would allow funds transfer or withdrawal that defeats the control objective. Frozen accounts become inaccessible immediately with no appeal process or timeline for review and restoration. The categories of accounts facing Monday freeze implementation include business accounts with significant cash handling, personal accounts with precious metals, purchase history accounts with international wire transfer activity accounts, with cryptocurrency exchange connections, and accounts with cash transaction patterns exceeding algorithmic thresholds. Small business accounts face particular targeting because cash-intensive businesses like restaurants, retail stores, service providers, and contractors generate transaction patterns that automated systems classify as high risk for money laundering, regardless of legitimate business purposes. Agricultural accounts face systematic targeting because farming operations typically involve large cash transactions, equipment purchases, and seasonal income patterns that algorithmic systems cannot distinguish from suspicious financial activity, requiring investigation and potential account restriction. Professional service providers, including doctors, lawyers, consultants, and contractors, face account restrictions because client payment patterns, cash transactions, and irregular income timing trigger automated compliance systems designed for wage earners with predictable monthly deposits. International business accounts face immediate freezing because any foreign transaction activity triggers enhanced scrutiny protocols that assume money laundering, tax evasion, or sanctions violations until extensive documentation proves otherwise through months-long investigation processes. Retirement accounts with precious metals. Investments face restrictions because physical gold and silver purchases are classified as alternative investment strategies that indicate distrust of traditional financial systems and potential tax avoidance through unreported asset holdings. The enforcement mechanism operates through Federal Reserve oversight of commercial banking compliance programs that require demonstration of suspicious activity, detection effectiveness through account restriction statistics, and investigation reporting that incentivizes over-compliance rather than customer service. Banking institutions face regulatory penalties for insufficient suspicious activity reporting while receiving regulatory protection for excessive account restrictions that err on the side of compliance rather than customer convenience or constitutional rights protection. The appeal process requires extensive documentation, legal representation, and months of investigation while frozen accounts remain inaccessible. Most account holders cannot afford legal challenges while facing immediate financial hardship from account restriction and loss of income access. Alternative banking options face systematic elimination through regulatory pressure on credit unions, community banks, and alternative financial service providers that attempt to serve customers displaced by major institution account freezing. Regulatory compliance costs force smaller institutions to adopt identical restriction policies. Cryptocurrency exchanges face coordinated pressure through banking partner restrictions that eliminate fiat currency on-ramps and off-ramps for digital asset transactions. Exchange banking relationships are terminated systematically to prevent circumvention of traditional banking account controls. Precious metals dealers face banking service elimination that prevents customer payments and business operations. Coin shops, bullion dealers, and metals investment companies lose banking access systematically to prevent alternative store of value adoption during traditional banking system restriction implementation. Cash-intensive businesses face systematic banking service elimination through account closures and service restrictions that force business closure or conversion to fully digital transaction processing that enables complete transaction monitoring and control. The timeline for implementation reflects months of preparation through banking system updates, compliance system installation, and coordination with federal oversight agencies that have tested freeze mechanisms through smaller scale implementations over the past year. Did you hear about the regional bank failures last year? While everyone was worried about their deposits, something much bigger was happening behind the scenes. It looks like those failures were a test run for a massive, coordinated system of account restrictions. This isn't just a local issue. The system ties into international banks in Europe, Canada, and beyond. They can all flip a switch at the same time, freezing accounts everywhere to stop funds from moving across borders. But how do they know which accounts to freeze? That's where it gets really concerning. Your mobile banking app is the key. It's not just for checking your balance. It's a powerful surveillance tool, tracking your transactions, your location, even analyzing your behavior. This data, combined with digital ID systems, paints a complete picture of your life. It links your bank account to your social media, your online shopping, and even your private messages. All this information feeds into an algorithm that decides if you're a risk. Instead of a government-run social credit score, this system works through the banks. If the algorithm flags you, you could lose access to your money. This might seem like a private decision by the bank, but the effect is the same. Suddenly, your life grinds to a halt. Think about it. No bank account means no job because you can't get paid through direct deposit. You can't rent an apartment, pay for utilities, or even get a car. Need to see a doctor or buy medicine? You need a bank account for insurance and payments. Want to go to school? Tuition and loans require banking. Even buying groceries becomes a challenge without digital payments. This isn't some far-off theory. This system could create a new class of people, completely cut off from the modern economy. Small businesses would be hit especially hard. Imagine trying to run a company without being able to pay your employees, your suppliers, or accept payments from customers. The whole economy could start to seize up. The pieces are all in place for a system of total financial control, built quietly while we were all looking the other way. The question is, what do we do about it? Thanks for watching. If this got you thinking, please like and subscribe for more deep dives. Tax compliance becomes impossible without banking access for payment processing, while tax authorities require digital payment systems for most transactions. This creates additional legal jeopardy for individuals already facing financial system exclusion. Property ownership faces challenges through inability to maintain mortgage payments, property tax payments, and insurance payments that require banking access. Property loss through foreclosure and tax sale affects families displaced from financial system participation. The resistance mechanisms become extremely limited once banking access disappears because modern economic activity requires digital transaction capability that banking restrictions eliminate systematically. Cash transactions face increasing restrictions and merchant acceptance limitations. Barter systems provide limited local exchange capability, but cannot scale to modern economic complexity while facing legal restrictions and taxation requirements that prevent effective replacement of monetary transactions for comprehensive economic activity. Community support networks provide temporary assistance, but cannot substitute for individual economic independence and financial autonomy that banking access restrictions eliminate permanently for targeted populations. Legal challenges face jurisdictional complexity because account restrictions result from private commercial decisions by banking institutions rather than direct government action, creating constitutional protection gaps that prevent effective legal remedy for systematic financial exclusion. The international implications affect American citizens traveling abroad, conducting international business, or maintaining foreign financial relationships that require domestic banking access for currency exchange and international wire transfer capability. Educational opportunities face elimination through inability to pay tuition, fees, and living expenses that require banking access, while student financial aid systems require banking relationships for disbursement and repayment processing. Healthcare becomes increasingly inaccessible as insurance payments, medical billing, and prescription drug purchases require digital payment capability that banking restrictions eliminate systematically. The generational impact affects families through inability to maintain financial relationships, pass wealth to children, and provide economic stability that depends on banking access for savings, investment, and transaction processing capability. Business ownership becomes impossible without banking access for licensing, insurance, taxation, and customer transaction processing. Entrepreneurship faces systematic elimination through financial system exclusion that prevents business formation and operation. Professional licensing faces challenges through inability to maintain continuing education payments, licensing fees, and professional insurance that require banking access for renewal and compliance maintenance. The enforcement acceleration indicates systematic implementation across all major banking institutions simultaneously to prevent customer adaptation or alternative system development that could circumvent financial control objectives. The timing suggests coordination with broader economic control implementation, including cash restriction acceleration, digital identity verification expansion, and alternative financial system elimination that creates comprehensive financial surveillance and control infrastructure. The scope indicates permanent rather than temporary implementation because infrastructure development costs and regulatory framework complexity suggest long-term strategic objectives rather than emergency response measures that would reverse after crisis resolution. The targeting criteria include political dissent indicators, alternative financial system usage, privacy-seeking behavior, and traditional economic activity patterns that indicate resistance to digital financial surveillance and control systems. The expansion timeline suggests systematic inclusion of additional account categories as implementation proves successful and resistance mechanisms prove ineffective against coordinated financial system restriction protocols. The resistance window closes rapidly as banking access restrictions expand, while alternative systems face systematic elimination through regulatory pressure and operational interference that prevents effective financial system alternatives. The mathematical certainty suggests successful implementation across the targeted 84 million accounts because resistance mechanisms remain inadequate while coordination between institutions and regulatory agencies enables systematic override of traditional banking service relationships. The countdown continues toward Monday morning implementation, while public awareness remains limited and preparation time expires for individuals who have not secured alternative financial arrangements before systematic account restriction activation. The final warning represents last opportunity for preparation before systematic financial control implementation eliminates individual economic autonomy for millions of Americans who lose banking access permanently through coordinated restriction protocols. Monday morning represents transition point from traditional banking relationship towards systematic financial surveillance and control that eliminates financial privacy and individual economic independence for targeted populations permanently. The 84 million account freeze represents systematic transformation of American financial system toward comprehensive population control through financial access restriction that affects every aspect of modern economic life. This is the final warning. Monday morning changes everything. Time is running out for preparation and alternative arrangement implementation before banking access disappears permanently.